Well, thanks for tuning in to BloombergQuint on Heads Up with BloombergQuint with me, Niraj Shah, and my colleague Ira Dugal, and the top headlines and the newsmakers. Well, start off with the markets. The Asian markets have started off on a green note. The SGX Nifty is indicating a positive start. So we'll be in for a sound start this morning.
Busy weekend in Delhi. We've got the GST Council meeting, the latest one. The July 1st deadline for rollout is in place, but some easing coming in on the filing of returns for the first 2 months.
The primary market activity takes center stage this week. CDSL opens today for subscription. Most brokerages have a buy recommendation.
And it will continue to be a busy week for the banking sector. We've got a series of marathon joint lender forum meeting coming in ahead of those 12 accounts being pushed into bankruptcy court.
Well, those are the top newsmakers. Good morning, Ira.
Good morning.
Not the best of matches, I would say.
Bro,
but depends.
Bummer, eh?
If you're playing cricket or hockey. If you're playing hockey.
Yeah. We know how suddenly all cricket fans turned into hockey
fans.
Yeah. Let's celebrate for the hockey guys.
Yeah.
Let's say next time for the cricket guys.
Yeah, next time for the cricket guys. They'll bounce back, I'm sure. Anyways, will the markets bounce back? Yes, in all likelihood they would. So they would. Remember, last week was the first week in the last 6, if I'm not wrong, wherein we had a red tick for the markets. Not a large one, but a small red tick nevertheless. Does that change the course? No. Does it mean that we'll have a strong indicative move starting this week? No, not really. I don't think there'll be too much, on that front. Export-oriented stocks really led the carnage last week. Can they bounce today or the bounce this week remains to be seen. As I was saying, I think it's the primary market would take center stage this week. Eris closes today, CDSL opens today, GPTL opens tomorrow. So a bevy of IPOs coming out, a lot of them very, very marquee IPOs, so could be very interesting to see what happens there. And last but not the least, keep in mind, the monsoon remains a focal point as well. Despite all the concerns, we staying in Bombay believe that, hey, monsoon hasn't really come about, and yeah, to be fair, it hasn't. But I think IMD on Friday and on Saturday to various media platforms did reassure that monsoon seems to be on track, so don't get too perturbed. Don't get unduly perturbed at least.
Yeah, I think we're set for the second year of a good monsoon.
Yeah.
That trigger taken care of. The other big macro trigger, of course, we're all awaiting, Niraj, is the rollout of GST. The government has held on to its ground that 1st July is going to be the rollout date. They had a meeting on Sunday. They've made a habit of having these weekends on the weekend meetings. But what came out of the meeting? Well, there's no moving on the 1st July date, but there was some relief coming in terms of the detailed filing of returns. So what the government has said is that, for the first 2 months of July and August, the detailed filing can come in by the 15th and the 20th of September respectively. So there is a little bit of relief coming in for those who are worried about getting their filings in on time. Apart from that, you had the anti-profiteering body, the rules for being set for the anti-profiteering body, which is going to be an important one as the rollout of GST happens, because you need to make sure that there is no profiteering happening, which could then lead to a price upside and inflation in the economy. So that's an important one, and they put that in place. The finance minister, of course, said that we hope not to need to use it, but should we need to use it, the body is in place. And I think finally there's some relief on individual counts. Niraj, they continue to tweak some small categories. In this case, hotels got a little bit of relief, so you could see some perhaps impact on the hotel stocks.
Yeah, well, higher rates only for the higher category rooms. 5,000 was abysmally low, I must admit that, quite frankly.
So they made it to 7,500.
Yeah, which is good. And I think restaurants as well. We'll talk about that, yes. But restaurants will probably heave a sigh of relief. Not too many listed players there. But that brings me to the question, or that brings us to the point of what are the key stocks that will react in the session today. And I'll get in Yatin on this one, because we'll start off with the big one, and that's the whole Tata Group. Well, we can talk about Tata Motors individually as well, but watch out for the Tata Group, because that could well be in focus today. Tata Steel could well be a beneficiary of sorts. Without me giving away any of the action, let's get in Yatin. Yatin, good morning. Why is this important today?
Morning, Niraj. Clearly we have the entire Tata Group, especially Tata Steel, looking for deleveraging efforts, and probably this is one move which helps the entire deleveraging theme for Tata Steel. Now, what is happening is that Tata Steel holds a significant amount of stake in Tata Motors. They are into the promoter category, but now we have Tata Sons, which will be buying the entire Tata Steel holding in Tata Motors. And if you look at the entire transaction, which is happening close to the current market price, Tata Steel would be getting close to 3,825 crore rupees from Tata Sons because of this interstate transfer. Of course, this indicates that there could be a significant amount of cash flow in the books of Tata Steel, which could be used to repay debt and part certain capex. But on an overall basis, if you look at it, it is almost 7 to 8% of the market capitalization of Tata Steel, which will be flowing in terms of the cash flow, which translates into almost 39 to 40 rupees per share. So that is something important, and which will keep the stock quite active in trade today. So watch out for Tata Steel. And Tata Motors also, that stock also will be in focus.
I think this is what we were talking about on Friday,
I was just about to say that.
When they sold, when Tata Motors sold out of Tata Technologies, there's the potential of other group companies doing similar kind of transactions within the group or outside the group. Tata Steel, in fact, has one of the highest holdings within the group overall. That's not to say, and they haven't done, this is not the first time they've done this. Even in 2009, when the companies were stressed, they did do these bits of stake sale. So it doesn't mean that the entire cross-holding structure is going to get unwound in a hurry, but yes, I mean, they can do it. They're saying that we can do it when we need to for our stressed firms.
Yeah, and I think Yatin is right. I mean, it will probably have a day or two of reaction in Tata Steel as well. You don't equate a 39 rupee inflow to 39 rupees growth, and therefore, an equivalent amount. It could vary here and there, so viewers be careful of that. But yeah, deleveraging, maybe part capex should be very, very interesting for Tata Steel. But that's Tata Motors and Tata Steel, and thereby Tata Motors is not the only auto stock in focus. Bajaj Auto remains in focus as well, because I think over the weekend the permissions for the limits or caps on auto rickshaws and taxis has been taken off by Maharashtra government. Now, I know people living in suburbs would shudder at this thought. Oh my goodness, was this necessary?
Do we really need more autos?
Yeah, do we really need more? But well, hey, you win some, you lose some. For Bajaj Auto, it could possibly be good news. Now, again, remains to be seen how much of an impact comes about. But there should be a small positive trigger. Keep in mind that SGX Nifty is already indicating a 35-40 point upside on the markets today. So maybe Bajaj Auto has its day in the sun today. You never know. Okay. And that aside, a couple of other newsmakers based on brokerage notes, Ira, CLSA predominantly out here.
Okay.
I think they came out with a very interesting note on cement, and they're saying that they believe that the volume growth that we've seen in the recent past, as well as the pricing trends, remain robust. So they see no activity or concern out there, and it could be very, very interesting times for cement. Keep in mind that a lot of these mid-cap cement names have now moved up higher than what they used to be. Like, for Dalmia Bharat or a Sanghi or some of the others. Shree Cement is a large cap, but a bunch of these mid-caps are now trading close to 52-week highs. We entering monsoon, which is typically a lean period, but the last 2 or 3 years, the stocks really haven't shown that. So that's the bit of a dichotomy, and therefore, could this time around be different with people getting more bullish on the cement space because of this whole infra spend that we are talking about? So it could be very, very interesting the next few weeks or months for cement as well. But that's not all, Ira. One last thing that I do want to point out in terms of brokerage notes is IPCA Labs. Now, you would remember last week we were talking about it.
Yes, you were speaking about it,
Yeah, and CLSA is talking about it. They are concerned. They've cut or slashed the target price by a wide margin. It's substantially lower than the current market price of IPCA Labs as well. So maybe some more pressure in IPCA today. So that could not be great news. But speaking of pharma, Ira, Shraddha and Agam managed to speak to Vikas Khemani of Edelweiss in Friday, thank God it's Friday, and they had an extensive discussion on pharma as well. Since we are talking about IPCA, I thought it's pertinent to probably just hear out what Vikas had to say about investing in the pharma space.
My question to you is, do you really believe that the worst is actually over for pharma?
There are multiple things against you. One is this whole regulatory backlash which has been going on, and currently also we don't seem to get any end to it, right? Even every alternate week we kind of end up hearing something. Secondly, I think you have pressure on the pricing side, because which is almost given, right, in the international market. And I think domestically also there are a lot of noise about having generic drug, making medicines cheaper for, and government is also kind of working. So I think I still believe that there are still many headwinds for the industry, and you should not be investing in any sector just because it has become cheap, because it can become cheaper, provided I think something is changing. And I currently do not see any of these headwinds changing. So if there is no change happening, why to go and just because it has become cheaper? There are multiple other opportunities where there are a lot of tailwinds in their favor. So rather I would stay invested into sectors where there are tailwinds rather than investing into a sector where there are headwinds but stock prices are corrected.
Well, if that was some bad news for pharma, essentially the CLSA note on IPCA, what could be good news today or this week would be primary market action. Eris, and in all probability will get subscribed well, so closes today, so last day to subscribe. But the big one is CDSL. There is of course GPTL as well, which comes out tomorrow and should be well received. But CDSL, without a shadow of doubt, will be well received. It's an issue that is priced not to perfection, but slightly below perfection. So a marquee company is leaving money on the table for investors. Keep in mind, it's an offer for sale, so nothing comes into the company. So there is no benefit that the company gets aside of the fact that a lot of investors get to cash in on the investments that they have made in past in CDSL. But hey, it's an opportunity for retail investors or institutional investors, of course, to go out and take a pie of one of the two companies which are in this business.
It's a nice duopoly business.
Yes.
But the flip side to the duopoly business is that I know that these guys have been gaining market share incrementally, but NSDL continues to be the dominant player in the market. And how do you gain significant market share in a business that is so regulated? Your pricing is regulated, you sort of grow along with the market. The market will of course grow as penetration of equity products increases. But to be able to break that NSDL dominance, I'm not sure how that happens.
Yeah, so I agree with that point, Ira, completely. But hey, in order to make money, you don't need to be with the number one player. You find being with the number two player if the business is rock solid. They have 45% market share. And their growth rates are nothing to scoff at, to be honest. The last 2 or 3 years, their margin expansion has been tremendous. So even if the business grows at about 10, 11, 12, 15%, whatever the numbers are over a 10-year trajectory, if the margins are strong, return ratios are okay, it's probably not a bad business to be in. It's a clean business. They are leaving money on the table, which is the key thing.
Which is interesting. That
so people in all probability, I can safely put my neck out on the line, having spoken to investment bankers and reading all the brokerage notes, that whoever subscribes to this issue will end up making money on the day of the listing or whatever, 1 year subsequently, so on and so forth.
Sure. Especially
looks okay.
It looks okay.
Yeah.
All right, that's CDSL. That will be in focus. Just since we've been talking so much about the primary markets, we've got the numbers that we were trying to pull out last week as well. This is what the year is looking like from a fundraising perspective. So we had 2 really good financial years in terms of IPOs and FPOs. This is all prime database data. This year, we've done about 3,500 crore already. We'll have a busy week this week, and the second half of the year will be where a lot of activity will probably be centered, because remember, the government has a big divestment number. A lot of that divestment is coming in from listings, which is the general insurance companies and the railway companies. So we don't know whether those will actually go through, but that's the idea. And if they do go through, the numbers could stack up somewhere pretty close to what we saw in the last couple of years. Good run for IPOs. Interestingly, good run also for QIPs this year. Last year was a softish year in terms of QIPs. This year you already done to a 22,000 crore, a little bit more than that on QIPs. My only disappointment here, Niraj, is that most of these QIP issues continue to be from strong companies. So that whole story about being able to deleverage by raising equity through the markets has not started. So whoever's going to the market are the stronger of the lot. So the market hasn't, or the QIP market hasn't deepened enough to be able to take some of these over-leveraged companies, because what they desperately need is equity to try and retire debt. That hasn't happened, but QIP numbers have picked up.
Yeah, I would reckon that would probably pick up if the desperate companies' stock prices are desperately lower and not substantially higher.
So if you price them really well, I mean they're really low priced, sure, you could always probably raise money at a price, right? But the right price is the problem. But this is just an interesting chart that we wanted to bring up. Niraj, I'm going to go back to the banking sector. Forgive me.
No, not at all. I read the headlines. One more PCA, and there is some more as well.
Yes, so there's Bank of Maharashtra, which went under prompt corrective action. So that stack and that list is continuing to grow. But I think what we wanted to talk a little bit about was what you were asking me on Friday, and I wasn't prepared to talk about it, is the list of 12 companies. So our colleague Vishwanath Nair has finally confirmed this. This is confirmed, of course, from banking sources, not officially released. These are the 12 companies that are going in for bankruptcy. There should be a space here. Apologies for that. But these are the companies. Some of the obvious names, Niraj, that we were talking about. A lot of companies in the steel space. I continue to think that is an important story to focus on. The number of steel companies that are going to go through this, and what that means for the industry dynamics. But Bhushan Power, which is not listed, Jyoti Structures, Amtech Auto was a bit of a surprise. Because that's a company that has been promising deleveraging, has not managed to do any. Electro Steels, JP, Alok Industries, Lanco, ABG Shipyard. It's a painful list. What's going to happen this week, Niraj, is that a lot of banks are going to go into joint lender forums meetings. Again, our colleague is going to be tracking that. The idea, from what we understand, is to try and come together with some sort of a deal before you head into reference to the IBC, which is the Insolvency and Bankruptcy Code. Bankers have said that they have a 2 to 4 week timeline, so there's not a heck of a lot of time. But I think in some of these, maybe there is the possibility, although I'm not entirely clear whether they can strike deals outside the IBC or they go into the IBC with a pre-packaged deal, but they're going to try and come up with some sort of a solution. So, this is going to continue to be the big action point in banking.
Yeah, I just want to draw one point, Ira, out here. I mean, save SR Steel, which is fine, but the others and a lot of these listed. But this list shows you that if you ever thought that you are smart enough to buy a distressed asset, the markets have proven you wrong, because one, that these companies, all of these have not made money for any investor in the last 12 to 18 odd months. I can safely put my neck out and say that it has not happened. Two, if you had invested money in any of these, you've lost out on the opportunity of investing that money in something else which has really grown. So simply put, don't try to be a hero and go out and try and buy a distressed asset simply because you think that, hey, there is some action happening and there is money to be made, unless you are a SOV investor. Because investing in accounts like these, and a bunch of retail investors get caught in investing in these accounts like these. I mean, I'm not signaling any one company out here, but essentially don't go out try and buy distress. There are better opportunities to invest. Look at sound companies. I think that's what comes out of this list as well.
No, absolutely. You are bang on. I mean, I can talk about one company that I've tracked very closely, and that's the whole Amtech Auto story.
Right.
I mean, the number of times the management came on various networks and said that we have a deal in the works. We're going to close a deal, deleveraging deal. We're going to sell our German operations, this, that, and the other. And the stock would always bounce up. And we kept saying, through various articles, etc., that let them put that deal on the table.
Yes.
And that deal is still not on the table a year and a half later.
Yeah.
So it's not easy to strike these deals. I mean, Electro Steels is the other story that I've tracked very closely. They had a potential financial investor from UK who wanted to come and buy it.
Yeah.
When banks started to do their due diligence, there was no understanding as to why they would want to buy that kind of an asset. So these are very tough deals to strike, and you're bang on. I think trying to bet on these deals being struck is foolhardy unless your IQ levels are through the roof.
Yeah, true. But just one last, I mean, at least I'm done with the stocks that I wanted to point out, Ira. GST probably still remains in focus.
Oh, yes.
Maybe some mention there.
Yes, absolutely. Let's just quickly run you through what happened on GST. We are now, 15 days away? Less than 15 days away.
15 days away.
It's a momentous task. The government and the GST Council have, stuck to that 1st July deadline. There was an interesting quote from one of the GST Council members saying that we're going to build the bridge as we walk on it. But it's creditable. They're making sure that, you stick to deadlines. Relief coming in on some of the filings. So we've had some, easing in terms of filings for the first 2 months, July and August. You can file the detailed returns by mid-September or so. So that's encouraging. The anti-profiteering body, as we spoke about earlier in the show, is now in place. So, they've got that stick if they need to use it. And I think the rate structures are now more or less complete.
More or less complete. So, as we wrap up, the one good piece of news is that if you dine out in restaurants and 5 stars, or if you go out and stay in rooms which cost northwards of 5,000 but sub 7,500, there is good news. So, the tax rates on rooms are lower. So, the limit has been put up to 7,500 instead of 5,000, which was the earlier one, and I really thought it was strange. I mean, 5,000 doesn't buy you a decent room in at least the metros for sure. And if you dine out in expensive restaurants, I don't know, I don't, Ira, maybe you do, but
Really?
The tax rates have come off. So it's 18% versus 28%. So you will save that little bit on the very expensive meal that you buy.
Niraj just taking us all out for dinner.
I could do that as well because of these rates. But yeah, that's about it from our end. Thanks for tuning in to Heads Up on Bloomberg Quint.